If you are a homeowner and you're 55 and over, or if you know somebody who's a homeowner and they're 55 and over, then please listen up. Today, I'm going over the benefits and the limitations of Prop 19, which has to do with the property transfer taxes, the good and the not so good. In early 2021, Prop 19 improved and replaced the benefits of previous Prop 60 and 90 for homeowners here in California. Simultaneously, it did create some limitations of previously held benefits of Prop 58 and 193, and I'll go over those as well. Prop 19 allows the 55 and over community and the severely disabled, the victims of wildfires, to be able to transfer their tax base on the sale of their primary residence into their new purchase. This saves homeowners a lot of money, thousands of dollars in fees. Now, you can do this 3 times. Previously, with Prop 60 and 90, this would only be allowed to be done 1 time, so that's a huge benefit. Another limitation of previous Prop 60 and 90, they would only allow you to be able to benefit from this if the property that you were buying was either equal or lesser a value of the property you were selling. That creates a conflict because a lot of the properties have gone up tremendously around us. So with Prop 19, you're not limited to value any longer. This is a huge benefit. So let's go over a quick example. I think it's the best way for me to go over this. Let's say you bought your house in 1993 for $200,000 here in Los Angeles. You're planning to sell because you want to get closer to family out in San Diego. The value of your home today is $1.1 million. However, your tax base is still based on the initial purchase of the $200,000. The property in San Diego is $1.25 million. Your new tax base will be the difference between your sales price and your new purchase price. In this case, you sold your home for $1.1 million and you purchased at $1.25 million. That is a difference of $150,000. Now you add the original tax base to that of the $200,000, which you originally bought the house for. Your new reassessed tax base will be $350,000. Now that is much better than being reassessed at the new purchase price of $1.25 million. So it saves homeowners thousands. Now, the limitations of Prop 19, when it replaced Proposition 58 and 193, which were very favorable propositions because they would allow no reassessment on inherited primary residence between parents and children for Prop 58, and for Prop 193 it was between grandparents and grandchildren. Now Prop 19 has placed a cap on the exemption of $1 million. Now, anything beyond that will be reassessed. Plus, an additional requirement, you have to live in the property. It has to be your primary residence, and you have to be able to file within 1 year in order to take advantage of the exemption. So let's do a little example again. Let's do the same thing. Your home, you bought it in 1993 at $200,000. Now you inherited a property that's currently valued at $1.4 million. You take the original assessed value of the $200,000 plus the exemption of $1 million. This is $1.2 million that will not be reassessed. However, the property is worth 1.4. So you subtract your exemption of 1.2 minus the 1.4, which is 200,000. Then you add the original assessed value of when the property was bought by your grandparents or your parents of 200,000. So a newly reassessed value will be 400,000. Hope that makes sense. I'm also including a comparison chart that I received from the tax assessor to kind of make sense of all this, but hopefully all this sort of helps. Thank you for watching this video. Hopefully it was helpful. If it was, please like it and forward it to somebody that might benefit from